Hi, Andy. Thanks so much for joining us here at Go-to-Market Expertise.
Hey, Ben, great to see you.
So our topic today is around founder go-to-market patience. And we've invited you here to give us a bit of an understanding of what you see from your perspective. Before we kick off, maybe you can give me a little intro into what you're doing now and where you're based, that kind of thing.
Sure, happy to. I'm based in the U.S., just outside of Boston, Massachusetts. I am the co-founder and co-managing partner of a venture capital firm. Our firm is Argon Ventures. We focus entirely on very early stage companies, technology focused, all B2B companies. We invest at the earliest stage, really, sometimes even at company formation, certainly before companies have grown into commercial, generally available products and operations. We focus entirely on an area that we call intelligent industry solutions. Which are really data and AI-driven technology solutions that help transform existing industries by enabling radical productivity advances, personal optimization, as well as sort of unique cybersecurity in today's complex world.
Awesome. That's great background. Thanks, Andy. What would be helpful as well is, can you give us an idea of how you got to where you are today? What were your prior experiences that maybe informed what you're doing now?
Absolutely. So before launching Argon, I was the chief executive officer of a public company called Brightcove, which was headquartered here in Boston. I had been one of the founding executives of Brightcove back in 2005, seems hard to believe, that long ago. And during my time at Brightcove, held a number of roles. Most interesting, I think, for these purposes, for sure, I helped design and lead our market entry into 5 different international regions and helped build wonderful teams and strategies that led those teams and companies to go from zero, really, in the regions to each of them over 20 million in revenue.
Amazing. That's great. I'm quite excited to hear how all of this fits together with your viewpoint, especially from an investor point of view. I'm sure a lot of our audience will really appreciate it. So let's get into that then. How would you characterize what we mean by founder go-to-market patience? Like, at a high level, what does that kind of topic really mean to you?
So in thinking about the role of the founder in sort of initial go-to-market, in our experience, and now I'm speaking both as an investor at Argon, and where we've got at this point 30 portfolio companies, but also our experiences at Brightcove. At the earliest stages, we think it's incredibly important for the founder to be deeply involved in the go-to-market and sales process. A lot of founders at our portfolio companies will ask us or believe that they need to hire an early salesperson right off the bat. And in our experience, until there's what I would call at least a strong hypothesis, if not actually established, product market fit, we think that it causes the company to really struggle in many ways. And so there's a lot to unpack there. But a few of the things that I would mention is we think it's incredibly important for the founder, who is, of course, the visionary for the company, the chief product strategist almost always, to hear the voice of the customer or the prospective customer directly. And so that means things like really understanding from the customer, what are the feature sets that are needed, what are the use cases that the solution is best designed for, what are the real pain points, and this is probably the most important part of it, what are the real pain points that the customer is suffering from? And unless the founder hears that directly and iterates back and forth with the customer on those topics, the product itself won't have a strong enough foundation or strong enough platform to really achieve the vision that the founder initially had, and which the potential for the company could embrace.
Absolutely. I've seen quite a bit of that myself. I think the bit you said sort of at the start there was that it's potentially possible that an investor like yourself may not be coaching a founder to rush out and grab the first bit of revenue that they could find. And I think that might be surprising to some. Maybe you can talk a little about why that is, and if not revenue, then what are those kind of tangible actions that founder could be doing to process that momentum?
Sure. So in terms of things the founder can be doing, let's put in the bullpen, if you will, the topic of pilots, which I think are important to come back to and talk about, because I think that may be one of the things that you're asking about. But just to expand a little more on the one hand, the expectation of investors, and on the other hand, sort of the value of what I would call really delaying general commercial availability as long as possible. A lot of later stage investors are focused entirely on revenue, and they're really focused on revenue as an indication of, again, what I would call product market fit, which I'll come back to. But you have to remember, at the beginning of a company, the founder the founder may have a wonderful idea, has identified a real either problem or opportunity in the market that he or she could solve. But that doesn't tell you, what all of the parameters of a fit product are. And of course, you're not going to be really successful unless you understand who exactly the right market segment is, who the buyer is, what they care about most, what their challenges are in deploying a solution. And it takes a while for a company to understand that and find that out. Just in our own experience, there were differences by own, I mean at Brightcove, there were differences in, for example, what the Japanese market for our solution wanted versus what the Singaporean or Indian or Australian markets wanted from our products. And so being able to spend time in market, communicating with customers, learning from them, hearing from them the ways in which they needed the product to be built, the feature sets, even the way it needed to be priced, both in terms of absolute cost, but also the way in which invoice cycles were created, et cetera. You really need to understand those things before you make an investment going to market. Otherwise, you're just spinning your wheels and losing both time and, frankly, money. And you only have an opportunity to be new once, which is something that founders need to remember. And so you want to make it as great as possible. There's also, and I know I'm sort of spending a lot of time talking about this, but it's so important. There's also something that I would call the customer tax. And so, if you run to market and you sign up a couple of customers because you can, who might pay for it, well, you then have an obligation to serve those customers and to deliver what they're asking for. And that means a number of different things. Among them, number one, those customers may be asking you to develop the product in a way that ultimately is not the most advantageous for that particular market segment. But you'll respond to them because they're paying you. You also don't want to churn those customers if you can avoid it, especially early on, because that will create challenges for future fundraising. You also have to have people at the company who are charged with ensuring that the customer is successful. And so the longer that you can, as a founder, you know, continue building the product the way ultimately you want to build the product without having to separate many of your resources into supporting existing customers, the more likely you are to build really the right product for the right market.
That's great. Great examples. I can definitely get into the pilot piece with you because I'm really fascinated to hear your viewpoint on that. Before we get to that, it sounds like this founder needs to have some sort of heroic personality where they've got to play quite a number of roles, and perhaps one of the least important at that point is trying to sign as many customers as possible, and more having those intelligent conversations where they can play the kind of the leader and the visionary, but also a product manager kind of role and feedback loop for the engineering team and this kind of thing. Is that something you see big differences in with the different founders that you work with, and is there any sort of commonality there that you can share?
Yeah, 100%, Ben. One of the things that we often see when we're looking at opportunities as an investor now is, especially given the category that we're investing in, we see brilliant founders, wonderful technologists. But because we've come to the realization that it's so important for the founder, or at least part of the founding team, to have these customer-facing competencies, and as you refer to it, product manager facing or DNA competencies. It's not enough, I think, just to be a founder who's technically brilliant. We think even after you've started with what I would call general commercial availability, we think for a long period the founder really will be involved in interactions with the customer. We think there are a bunch of different reasons why that's true and why it's so important that for companies that we're looking at, there be this, again, I'll say DNA on the team. Number one, in interacting with the customer, of course, it's the founder who's the product visionary, who helped build the product and ideated it, who will know the product the best. And there is no, as you know yourself, there are no shortcuts in sales. And so really knowing the product better than anybody else is a fundamental requirement for interacting with the customer. The founder also will be the person who knows the problem the best that the company is trying to solve. Look, if the founder is not deeply passionate about solving that problem, and if that doesn't come through, and if the founder can't articulate that, well, frankly, they probably wouldn't have gotten funding from us or other investors to begin with. And so being able to communicate that to the customer is deeply important and will be for years to come. Certainly, the founder or the leadership team is the team that will have the authority to make decisions about, I'll say, deals, agreements. And especially early on, those are never out of the box. You're always trying to figure out, how do we make this work for the customer and for the company? What are terms that we can change and get creative with in order to make this a success? And so, having a founder who's in the room who can make those decisions is deeply important. The customer is going to trust the founder much more so than somebody who's just on salary, right? The customer wants to know if they're spending money, if they're making a bet, that they can call somebody up in the middle of the night and say, this isn't working for me, I need you to fix this. And they trust that the founder will make that happen because frankly, it's the founder's company. So, those are some of the many reasons. I could go on for a long time.
That's great. So you talk about this this concept of early pilots or early revenue or early paid for POCs. You can kind of call it what you like, but I think what's really important is characterizing that and what makes a good pilot, what makes a good pilot customer, perhaps the quantity, that kind of thing. What I've seen is is that it can appear on the beginning, because you can often land innovative large enterprises to help you in that journey, who will give you real good feedback. They've spent many times evaluating platforms. They've spent many times procuring platforms. They know the questions to ask. They know the teams to gather on their side to get together. In fact, they can be quite organized. But these companies could be 10, 100, 1,000 times bigger than your startup. So, like, what does make a good pilot? What should I be looking for? How diverse should those pilot customers be, with the view to what comes next after that, I guess?
Sure. And so there are lots of different pieces of the answer to that question. To hit on a few, I guess let me say two things to start. First, I think of pilots as tied to having the founder deeply involved in the process with the quote unquote customer, and the reason being because of ultimately what the goal is. And the goal of both pilots and the founder, having the founder so deeply involved, the goal is because ultimately you want to learn a number of things. And again, I'm saying you, meaning the company. Mm-hmm. You want to learn a number of things, meaning the company that we've invested in, the early stage company. You want to learn what it is that will make a truly awesome product. You want to learn really who the right customer is, who the buyer is. You want to learn really exactly what the problem is for the customer that you're solving. And so the founder needs to be deeply involved as part of the feedback loop to hear that from the customer, to be able to bring that back to the company, and to be able to see firsthand sort of the evidence of what's happening. And that's also, on the flip side of it, what you need to keep in mind when you're designing the pilot. So the goal of the pilot is not to get X $100,000 worth of revenue. At that stage of the company, the people oftentimes will sort of shorthand, well, if there's revenue, there must be product market fit. And the reality is nothing of the sort. And for an early stage company, sure, $100,000 or even a couple $100,000 worth of revenue might seem really important and really valuable. And from a capital raising strategy, we can talk about that. Maybe it's helpful. But that's not going to make or break the future of the company one way or the other. But if you fail to learn from your early customers, then that is going to make or break the company. And so the way I think about it is we like to set up, and this is more of the prescriptive part of the answer, right? We like pilots to be set up where there are only, say, 3 to 5 customers in a pilot at any one time. Maybe you'll run multiple pilot programs, but limit the number of quote unquote customers in a pilot. Make sure that the founder, or at least the founding team, can be deeply engaged with the customer who's engaged in the pilot. Don't try to make lots of profit from the pilot. Maybe charge so that you're covering your costs. Maybe charge so that the customer feels that they have skin in the game and will make a commitment. But it's not about maximizing revenue at that stage. We recommend strongly to our companies that if they're going to run a pilot, that the terms of the pilot, in terms of what the customer will commit to, be laid out in advance in a joint document, if you will, where what the company is going to deliver, how the customer is going to use it, what the goals of the pilot are all laid out in writing ahead of time and agreed to by both parties. We like the company that is the customer that's performing the pilot with you to make a commitment in terms of literally named individuals who will be responsible for participating in the pilot. We like there to be a regular cadence of formal communication, where whether it's a weekly meeting or an on-site visit or the like, things that are very concrete. And in an ideal world, you would spell out, the goal is to understand if these three features are what the customer wants, or to understand, who's going to use it, how often they'll use the solution, and what value they're going to get from the solution. A failed pilot in terms of not achieving the goals, that can be really valuable if you learn from it. The only pilot that isn't valuable to do if you are the company is one where you don't learn anything. You might find out that the company, the customer, if you will, is the wrong segment or the wrong buyer, or it's priced wrong, or the solution doesn't work for them. And that's fine.
Right. I can imagine some of those things going as well, where you deliver what the pilot sort of says it's going to deliver, but the customer actually finds one sector of your product really useful, and then starts shooting off in that direction, and perhaps provides a lot of feedback in that area. And then as a company, how do you reflect on that feedback? Because if you then start sort of forking off your main goals and you start to service that customer, it's probably quite tempting as a founder, because they're the ones that are giving you the feedback. They're engaged, they're leaning in, they're giving you, it's kind of looking quite positive. How do you resist the temptation, or how do you weigh up the temptation of just developing those features for that customer because you think that's where the product is heading or where the market's heading?
Yeah, well, I think you've hit spot on one of the key qualities or skill sets of a great founder. And so there's a tension, there's a judgment that needs to be made in really listening to the information, learning, feedback that you're getting from these early customer engagements. Sure, if you have $1 billion company who's performed a pilot and is telling you that they really want, features 9 and 10, and they'll go off and continue working with you on if you'll build features 9 and 10 and make that the centerpiece of your product. Well, as a founder, you have to really make a judgment call. Am I hearing the voice of my target market sector, where I have a passion and a belief that I can make the biggest impact? Or am I hearing a one-off and I would be distracted? The difference between a professional services shop and a product company is the product company is building for a particular segment that meets a particular profile, and things that are on the roadmap, they can be influenced by the feedback that comes in, but it has to fit within an overall whole, an overall hypothesis about what you're trying to serve and build. Yeah. Whereas a services company, wonderful, somebody's willing to pay me to build something, I'll go off and build it, even if it's in some ways throwaway code, right?
Right. That makes sense. So like, let's say we pass the Andy Feinberg criteria for getting 3 pilots done, and the founder sort of has reiterated, had lots of conversations. We feel they've got product market fit. Let's call it in inverted commas, because I think the opinion on product market fit is wide and varied. But I'm going to be facetious here. But they just go out and hire a VP of sales, give them a deck, and off they go. Is that kind of the next step for them after those 3 pilots?
Yeah, I mean, I would argue no. Many companies will do that. Right. I would argue, and again, leaving aside sort of the vast debate on how to define product market fit, let's not label it for the moment, right? Sure. But I would argue that, first I would say that, 3 customers in a pilot's not enough to really understand if sort of what you're doing and where you're headed as a company. I would instead sort of think about it this way, right? If I would say there are probably 3 or 4 characteristics that I would want to see. And ironically enough, when I was thinking about this, I came across a an article that was written by one of the founders from one of our portfolio companies that had a really successful exit already. And although our views weren't perfectly aligned, I think the combination of how we think about it makes a lot of sense. And so the 3 or 4 characteristics that I would think about that you're really looking for, right? Number one, first and foremost, right? Can you genuinely say that the product is awesome? Sort of all capital letters. And that means not just that, you're impressed with what you've built yourself, but that people who are using it think it's awesome. And that's a high bar. That doesn't mean it has to be a finished product. It doesn't mean it has to be a feature complete, but is the experience being put into a user's hands an awesome experience? And so that's sort of first and foremost. I think, though, in thinking about when it's right to sort of explode, if you will, into commercial availability, I would want there to be, I guess, what I would call excess opportunity. And what I mean by that is, if there are 2 or 3 or 4 or X number of customers who are out there who you have an opportunity to sell to, well, it may be that the founder and the founding team can capture that. And if you can, go ahead and do it. And I don't think you need to or are ready to bring in sort of what I would call an outsider who's not part of the founding team, who might be a highly professional salesperson who is incredibly talented, et cetera. And we'll talk about, if you have time, some of the risks or concerns about bringing in a senior salesperson too early. We'll talk about that in a minute. But if the founding team can capture the opportunity that is in front of them, great, go do it. For all the reasons we talked about earlier in this call, like the founder will need to be involved no matter what. If, on the other hand, you've got, $500,000 or $1 million worth of opportunity, or 5 or 10 customers where you feel that you're just losing those opportunities because the founding team doesn't have the capacity to get those folks, and your product's awesome, then I think you need help. And then I think it makes sense to go bring in either an outsourced resource or a professional senior leader to help you go get that opportunity. Again, this isn't the case where you're bringing in a junior SDR or BDR to help create more opportunity. This is the case where the product's awesome, you're capturing all the opportunity you can, but you've got excess opportunity that's sitting out there that if you don't capture, somebody else will. And then that's a real problem. A third characteristic that I just want to raise because it's so important, and I don't mean to hold you off or interrupt you, but your company has to be prepared to be stressed. So taking on customers, especially significant paying customers, and bringing in another resource to help you capture those will stress the company. You need support team. You need folks who are pushing the envelope in terms of deal terms. You need, however awesome your product is, every customer will probably want something a little bit different and have complaints or demands or things that aren't quite bespoke for them. And there's going to be a lot of stress and a lot of tension. And your company needs to be ready for that. Not every company is yet, and it's okay to wait until you're ready to be stressed.
And I feel like there's not a lot of looking back at that point, right? The concept of a founder committing founder-led sales is great in one hand because you can almost visualize the backlog of engineering tasks. They can, as they're in that meeting, they can make decisions on the fly. They know their cost base. They're in a great position. But again, if they make some commitments there that tie up the engineering team for the next 4 months, and there's no room for even a nudge of help to service another customer, you've got a problem. I think even you've got a problem there where you kind of alluded to some of the risks there. Maybe we can get into that now, but the risk of going from founder-led sales to a VP of sales. The idea, I guess, is, like you say, is to accelerate the opportunity that's out there and take the burden off the founder, which is sales discipline, and there's just a lot to do, right? And I think that's great to be able to take that off off the founder. What are the other kind of risks you see there in bringing in a VP of sales too early, and I guess being impatient
Yeah.
with hiring that next resource?
Yeah. Well, first and foremost, from a what I would call sort of company building strategy perspective, once you bring in a senior sales leader, you are disintermediating in many cases the founder or the founding team from the customer feedback loop. Now, if you've developed the product patiently and really listening to customers, and the product is awesome, and you've really got an understanding of the feature set and the market segments that you want to target and who the buyer is and all of those things, then that's okay. I mean, sooner or later, you're going to have to do that. But the risk in doing it too early is that you will cut off access to that incredibly important feedback loop. That's a strategic risk, frankly, I think. On a more tactical level, senior folks are expensive.
Right.
And, there's no perfect way to be certain that you're going to hire the right person. You're going to be committing significant capital and time as well to bringing in a senior person. Your company at this point is probably only 5, 10, 15 people. You're not capitalized with, tens of millions of dollars. And so it's a risk if you get it wrong. Sooner or later, you have to take that risk. But being as certain as you can about who the right customer is, who the buyer is, what the feature set that you're selling is, et cetera, is really important. Those things also inform who you hire. So, for example, the profile of a person who's been selling directly to chief technology officers, CTOs, in a certain category at a certain market segment is probably quite different than somebody who's helping to design a product growth strategy that's focused on, winning the hearts and minds of individual user developers, right? And so really understanding who the buyer is, who the user is, will help inform what that profile is.
Yeah, I can understand that, and I think especially if that founder is, and in your case, I would imagine quite a lot of that in sort of deep tech and intelligent industries that you're investing in, they're very technical, and to bring in a quote unquote salesperson who really doesn't have a lot of technical bias, maybe there's a huge gap then, and then you probably have to plug the salesperson with like another resource to help them and then now you're kind of patching around the person. Whereas I think we've seen a lot of domain experts, like you mentioned, if they're used to selling to CTOs, they can talk the same language, they understand the peripheral potential systems that this solution integrates with, and they just have a lot more knowledge, and it's more consultative and solution orientated. I guess you have a better opportunity there.
That's right.
It's
That's
difficult.
right.
Hiring's difficult, right?
Hiring's really hard. Another aspect of it that relates to some of the things we've been talking about is, when you bring in your professional sales leader, right? Like you want that person to be closing deals, right? You want them, like, right. That's what you're calling them for, right? And so their goals will be, to sell what's available, to sell to the segment that is most efficient at getting to close, which if you bring them in too early, you may end up stuck in sort of what's easy and might not be sort of the longest term value for the company, right?
Right.
And so that's, you in some ways, by bringing in the senior salesperson too early, you are in a self-perpetuating cycle of selling to what's available now, which might not maximize the opportunity.
Absolutely. This has been really good, Andy. I think we could talk quite a lot longer on just this topic, but there's plenty of other topics in there that we might have you duck into another time as well. What, like, if you were to sum up some of those points that we've heard today, to someone who's either a founder or part of the founding team, or even investors who are involved in startups looking to give advice on that patience, like, what are those couple of takeaways there that you would suggest that company thinks about?
Yeah, I mean, I share this with our companies all the time. Be patient, right? Build the best product and learn as much as you can before you get too worried about revenue. Look, I mean, I for over a decade, a large part of my compensation was based on the revenue that we could bring in,
Right.
and you will need to generate rapidly accelerating revenue in order to be successful as a company. But you only get to be new once. And so the longer that you can spend, listening to the voice of the customer, learning what the right feature sets are, how the customer will use the product, what their pain points really are, hearing from them, not your hypothesis, but hearing from them, the customers. The longer you can do that without bearing the burden of a customer tax and stressing the company, the better off you are for the long run. And so be patient. It's hard to hear, but be patient. And one of the things, Ben, that goes along with that is ensuring the right capitalization strategy that allows you to do that. And that, of course, changes over time as capital markets change. And so I'm not going to suggest that we talk about that here. That could be a long conversation. But I do think it's worthwhile, right? If you have the wrong capital plan matched with the company, then their ability to be patient is significantly impaired. And I'm aware of that. So aligning those things is super important.
Great point to finish on. Thank you very much, Andy. Really appreciate your time here on GTM Expertise, and all the best with Argon Ventures. And I'm sure we'll talk soon. Thank you very much.
And thanks a lot. This was fun.